Welcome back. Closer to the high point of today's trading session, the IT stocks are giving Nifty some sort of support along with the Nifty bank right now. So Infosys has moved to the high point of trade. And we have some support coming in from the likes of TechM and others as well. So the IT index comes up for you. And that's telling you that it has moved further as well. Moments ago, we had Rahul speak about Reliance. So if the possibility of Reliance, Nifty bank and IT index coming together supports the index, then of course, we are looking at much higher levels than what resistances would suggest. But that's about technicals, the fundamentals of the market. How are they placed at right now? We have Pankaj Murarka, who's the founder of Renaissance Investment Managers, joining in to give us his views. Pankaj, we have been outperforming. What are your thoughts? Where do we go from here? The FIIs are back. Is there enough in terms of valuation support? Because from the point we started rallying, the valuations at that point were pretty much in our favor. But now they're back to mean levels.
And that's not bad, Mangalam, being at mean levels, because logically India will always trade at premium given the structurally higher growth that the Indian economy offers in relation to context where the world is. And given the superior return ratios or return on capital employed for Indian companies, the fact is that we are at a point where second half of the year, 60% of the world GDP potentially could get into a recession. And India probably could be an outlier economy with strong growth. China will do good growth this year, but I think this is going to be an outlier year for China, given the low base of last year of COVID lockdowns. But structurally, I think the fact remains that apart from US, Europe, there is no other game in town when it comes to investing. So I think India's valuation should remain much higher in that sense. And in that context, we continue to remain positive on markets directionally. I'll not be surprised if we make a new high on the index before the end of the year.
Pankaj, I know from our past conversations that you've been a backer of Zomato, Paytm and some of the internet companies well before the street took notice of their profitability targets, etc. Now, over the weekend, the big buzz is about ONDC and how its offerings are cheaper than that of Zomato and Swiggy. What impact do you think this is going to have on Zomato? How do you see this play out over the next 5 years? This battle between ONDC, Zomato, the consumer preferences, and what it means to profitability targets.
Directionally, Rima, I think all these companies are poised to grow and become probably over a much longer period of time. Some of these companies will emerge amongst the top 50 companies in India. As far as the impact of ONDC is concerned, it might have some short-term impact on some of these companies, but I think that will probably force these companies to become more efficient in that sense. The fact remains that Zomato, with about 5 crore users or something like that, provides a meaningful service, and there are enough takers for that in that sense, and they have a business case. So it can have short-term impact in terms of forcing these companies to become much more efficient, but directionally we remain significantly positive on all internet companies. We think the profit pool for internet businesses over the next 5-10 years will increase significantly. And some of these companies have achieved very dominant position in their respective sector. And more importantly, if you look at what we're talking about, let's say food distribution, it's kind of become sort of oligopoly with just two players around. So directionally,
so in the short-term impact, you don't see as a strategy Zomato, Swiggy offering more discounts to match what ONDC is offering?
Well, it's just not about the pricing, it's also about the service levels and many other things that come into play from a customer's point of view. So I think eventually customers will make a choice basis, service levels and everything else. And that might force these companies to make some adjustments to their pricing in some pockets, but I don't see that disrupting their business in any manner. If at all anything over medium term, I think ONDC can actually bring in more efficiencies and help these companies accelerate their growth over a longer period of time.
All right, take your point on that. Just looking at a couple of these consumer names right now, Havells, consumer durables, that is, decent numbers coming in. The management commentary was positive as well, though some profits being taken off that counter. Havells is at the low point. We have Pidilite ahead of numbers today. The stock has moved to the lower end, and that's interesting because the street is bracing itself for a sharp margin expansion and good volume growth coming in for Pidilite as well. So these are a couple of stocks which are, buzzing around. Your thoughts on the consumer space, the big deal that was announced over the weekend, which is with Aditya Birla Fashion and TCNS. Do you think Aditya Birla Fashion has in itself to be the house of brands LVMH equivalent of India?
Well, the opportunity is big because the second biggest category in terms of consumer spends across the world is apparels and fashions, grocery being the largest. The largest organized player, which is Aditya Birla Fashions, in this case in India, the largest player in organized fashion in India is still a mid-cap company, which is a dichotomy, because everywhere in the world you go and see US, Europe, or any other part of the world, the largest fashion and apparel retailer is among the top 50 companies in that economy. So obviously the opportunity is out there in India. Now, whether they can execute or not, time will, the jury is still out in that sense. But I think there is a significant opportunity in the apparel and fashion space in India.
You're discounting Reliance when you say the largest fashion company is not part of the top 50 companies, because the only other company which has a larger portfolio of brands and has made more deals than Aditya Birla Fashion in this space in the last 12 months or so has been Reliance. So if you had to play this space, would you play it via Reliance, which offers the comfort of money, conglomerate, and the growth path that Reliance goes on, or Aditya Birla Fashion, which is a pure specialized play but does not have the treasure chest of Reliance?
Well, Mama, if you ask me, I think the opportunity is very large, and I take your point. Reliance is another large player out there. Probably, I would bet my money on both of them, because the space is much large to accommodate a handful of players. Given India is the second largest population, or probably now the largest population, and we are in an environment where per capita income are increasing in double digits nominal level, and that effectively means a significant low double digits or mid-teens kind of a growth in the whole organized fashion retail business. So I think probably there is an opportunity for many more players, and if I were to make that choice, probably I'll put my money on both.
What if I was to, make it a little more difficult for you? We've spoken about the Birlas and the Ambanis. What about the Tatas? Trent is also another listed player. They have Westside, Zudio, and the JV with Zara.
Yeah, well, so as I said, the space is large. Each player has its own strategy. Trent has their own strategy with what they're doing with Westside and with Zudio. In that sense, on top of that, they have this JV with Zara. The market is, as I said, very large in that sense to accommodate a handful of players, because you dissect the market across consumer segments and across categories, women and men in that sense, our kids apparel, and then within that at different price points across different categories, be it formal wear, leisure wear, and so on and so forth. So I think the market is large enough to accommodate a handful of players, and there will be a handful of winners in the space, which will become very large over a period of time.
In one word, which one do you think is going to be the winner? One word answer, Pankaj.
Well, we own both Reliance and Aditya Birla Fashion, so...
Okay. Two winners for you.
He would just hope that Trent is not the winner, because he owns Reliance and Aditya Birla Fashion.
All right. Thank you very much for that, Pankaj. We'll have to leave the discussion there. Need to slip into a very short break. We'll come back with more on the market.